Hi, this is Ron Rowland from Money Markets TV. Today's Supreme Court ruling on the Affordable Care Act, otherwise known as Obamacare, is likely to shape the debate about health care reform for years to come. And it will certainly have some implications for healthcare stocks and ETFs. But exactly how they'll react is somewhat unpredictable. And we'll have to watch the markets over the coming days and weeks to see what investors make of the decision. However, regardless of the outcome, I think healthcare is still a relatively safe bet. It's long been classified as a defensive sector, meaning it's protected from most economic ups and downs. When times get tough, like now, people are much more likely to cut back on luxuries than on medicine. That's why the healthcare sector has outperformed the broad market by a wide margin since the end of February, and why I think it will continue to do so. After all, the political fight isn't about whether people will spend money on healthcare, it's more about who pays the bill. For that reason, healthcare insurance companies, hospitals, and other treatment facilities probably have the most at stake in the ruling. These stocks are typically described as healthcare providers or medical services. To see how those stocks are reacting to the decision, watch the iShares Dow Jones U.S. Healthcare Providers and the SPDR Healthcare Services ETFs. Another big subsector within the healthcare industry is pharmaceuticals. The performance of the drug makers is based mainly on the success of their medications, but they're also dependent on favorable government policy. We'll see whether the court ruling helps these companies by watching the biggest ETF in the category, SPDR S&P Pharmaceuticals. Another thriving segment of the healthcare industry is biotechnology. The ETFs in this field, led by iShares Nasdaq Biotechnology Index Fund, have all posted eye-popping numbers this year. And only time will tell whether the Supreme Court can take the wind out of their sails. Finally, we have healthcare equipment. Companies in this segment make everything from stents and pacemakers to sterile gloves and syringes. Overall, healthcare equipment stocks may have the closest correlation to healthcare demand, so I think their long-term potential is high. Take a look at the iShares Dow Jones U.S. Medical Devices and the SPDR S&P Healthcare Equipment Funds. Ultimately, I think the entire healthcare industry will stay healthy, and the stocks and ETFs will continue to move higher, no matter what the courts or Congress may do. But there will be winners and losers within the sector. If you want to know who's going to come out on top, pay close attention to the funds I named today. I'm Ron Rowland from Money Markets TV. Thank you for watching.